Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Blue Owl Capital Inc. quarterly report. Blue Owl Capital Inc. provides a range of businesses and services to various clients. These include permanent capital-based solutions for middle-market companies, large alternative asset managers, and corporate real estate owners and tenants private financing solutions such as plus direct lending products, diversified, technology, first lien and opportunistic lending, plus alternative credit plus investment grade credit, plus liquid credit plus other credit solutions, GP strategic capital products offering, plus capital solutions, GP minority stakes, GP debt financing, professional sports minority stakes, real estate products including plus acquiring triple net lease real estate by investment grade or creditworthy tenants, plus real estate debt finance through net lease, and real estate credit. These services are offered through permanent capital vehicles and long-dated private funds. The decline in Blue Owl Capital Inc.'s stock price over the past year can be attributed to several key events and reports. A significant downgrade by Goldman Sachs in January 2025, citing concerns about the company's credit business, competition, and rising fundraising costs, was a major contributor to the drop. The Cowen 2025 earnings report also presented a mixed picture, with a substantial decline in net income due to increased expenses and net losses on investments. Additionally, the performance of Blue Owl Capital Corporation, OBDC, a business development company managed by Blue Owl Capital, missed expectations, with adjusted net investment income per share falling short of consensus estimates. The downgrade by TD Cowen in July 2024 further exacerbated concerns about the company's financial performance and growth prospects. These factors collectively contributed to a challenging year for Blue Owl Capital's stock performance, resulting in a decline of over -21.23% in the past year. The primary drivers of revenue growth or decline can be summarized into two main categories: management fees and the performance of various investment platforms. Revenue growth is primarily driven by management fees, which account for a significant portion of the company's revenue. The deployment of direct lending strategies, new capital raised, and the expansion of existing assets into fee-generating products have also contributed to revenue growth. Additionally, the success of the credit platform, real assets platform, and GP strategic capital platform has driven revenue growth through various investment opportunities. On the other hand, revenue decline is primarily attributed to performance revenues, which have decreased due to factors such as liquid credit and FRE performance revenues. Administrative, transaction, and other fees have also declined, contributing to a decrease in GAAP revenues from 2024 to 2025. Net income and profit margins decline at Blue Owl Capital Inc. The financial performance of Blue Owl Capital Inc. has taken a hit, with net income and profit margins experiencing significant declines. For the 3 months ended September 30, 2025, net income attributable to the company decreased by $23,495, while for the 9 months ended September 30, 2025, it dropped by $57,675. Profit margins also suffered, with distributable earnings as a percentage of GAAP revenues decreasing from 50.2% to 46.9% in the 3-month period, and from 49% to 43.8% over 9 months. The reasons behind these declines are multifaceted, including a decrease in income before taxes, an increase in expenses, and higher compensation and benefits costs. The company's fee income earned also decreased, contributing to the decline in net income and profit margins. Additionally, increases in amortization related to recurring annual equity grants, acquisition-related equity compensation, and intangible assets further eroded profitability. These factors combined to negatively impact Blue Owl Capital Inc.'s financial performance, highlighting areas that require attention for future improvement. The company is indeed generating positive operating cash flow, as evident from the significant increase in fee-related earnings before non-controlling interests over the past 3 and 9 months. The operating activities also show a substantial rise of $197,646 compared to the previous year, indicating a healthy financial performance. This trend suggests that the company's operations are generating sufficient cash to support its growth and development. The company's financial summary reveals a notable increase in interest expenses, despite relatively stable debt levels. Specifically, interest expense rose from $102 to $42,352 for the 3 months ended September 30, 2025, and from $89,301 to $122,862 for the 9 months ended September 30, 2025. This significant increase in interest expenses is attributed to higher average debt outstanding. In contrast, total debt levels have not changed significantly, with long-term debt obligations remaining unchanged. Management's outlook on company strategy. The company is poised for continued growth, driven by strong performance across its platform. Key strategies include pursuing strategic acquisitions and investments to accelerate expansion and broaden product offerings. Management expects sufficient liquidity to meet working capital needs for at least the next 12 months, with plans to use various sources of funding to grow existing business, expand into new areas, and fund acquisitions. The company is also leveraging recent acquisitions to drive growth in digital infrastructure products and continue fundraising and deploying capital within its real assets products. The company has made several significant acquisitions and divestitures in recent periods. Key acquisitions include Atalaya, IPI, KAM, Prima, Second Oak Street Earnout, and Dial. These deals are expected to enhance the company's operations and growth prospects. In terms of divestitures, the company completed strip sales transactions totaling over $2.5 billion during the third quarter, indicating a strategic effort to optimize its portfolio and generate significant revenue. The company dividend and share buyback. Overview. The company has a history of paying dividends to its shareholders. This is explicitly stated on pages 10 and 37 of the financial summary. However, there is no clear indication that the company has engaged in share buybacks. Instead, it mentions reinvested dividends and share repurchases in footnote 6 on page 10, suggesting that any share repurchases may be tied to dividend reinvestment rather than a separate program. That concludes the financial summary for Blue Owl Capital Inc. Feel free to comment below, and I will be happy to answer them when possible.